Welcome back, traders. In this lesson, we're diving into support and resistance, which is one of the most powerful concepts in trading. Mastering this will help you identify high probability trades, setups, and improve your accuracy. Alright, let's dive in.
If you like my content, make sure to like this video and subscribe to my channel. Also, do turn on your notifications so you can get notified when I release new videos.
Okay, so what is support and resistance? Support is a price level where buyers step in, preventing further declines. So you can see on my chart on my screen here. While resistance is a price level where sellers step in, preventing further increases. Think of it like this: support is a floor that prevents price from falling further. More of like a floor. Let's do an example here. Just like, let's pretend that this is a floor. Now price keeps coming to that floor and then bouncing from that floor, moving upwards, bouncing to the same floor, moving upwards. That is what support is for us. Yeah. So likewise, then resistance is a ceiling that prevents price from rising higher. Okay. Resistance is that ceiling, just like the way price kept hitting this floor. Price comes to the ceiling here and then keeps bouncing back to the floor. That is our resistance. Now, okay, let's move on. For an example, imagine a ball bouncing, a bouncing ball. It keeps hitting the floor, which is the support, and the ceiling, resistance, until one of them breaks out. So now, just like we're saying here, let's delete this off. So now, let's say this arrow here is our ball. So now price hits the floor, which is the ball, goes to resistance, hits resistance, comes back, the ball comes back to the floor again, goes back to resistance, comes back to the floor, and then we had the final break. So that is pretty much how support and resistance works in the market. Okay, we'll move on the class. Now, how to identify key support and resistance levels. Now, these levels can be found in 4 main places which I have marked out here. You find them out on historical price levels, you find them out at psychological levels, trend lines. You can also use moving averages, but we won't be using that in our classes. Then you can also use Fibonacci retracements as well. But basically, I'll be teaching you these first two, which are historical price levels and psychological levels, and then we'll touch trend lines as we move on in the classes. Okay, so now let's go on with historical price levels first. Look at past highs and lows to find out those historical price levels. Okay, let's do that. Now, looking at those historical price levels, you notice this was an hold low, which is our support level. Remember, we said the floor. Now this is our hold high, resistance. Now price came back to this level again, creating a low, moving back up again, created another high, which is resistance, reacted to this past resistance, created another resistance, then came back down again, created another support, went higher, created another resistance again, went a little bit lower, created another support, resistance again, then came back and reacted to this past support here. Remember this low, price came back and reacted to it, came back all the way up here, created another resistance again, and then fell all the way back to our past floor, which is our past support. So you can see price keeps going back to the past highs and lows as it keeps rallying up and down. Then we move to psychological levels. Now, I think we spoke on this on the last class where I marked out the past psychological levels on gold for you. So let's do a little bit of that again, so you can remember what we did last time. Okay, now I'm going to use this horizontal line here. So our psychological levels are basically those round numbers on the chart. You can see that's 2940. Then we move to another round number we see again. That'll be 2930 as well. You can also use 2920. You know, we keep going down like that, 2910. So those are psychological levels on the chart. If you want to mark out your psychological levels, all you need to do is find out a round number and then keep going down or up, counting in tens or 20s. You understand? Okay, then we move back to our class. Okay, now trend lines. You can also use your trend lines to find out your support and resistance levels. We also spoke on this on the last class. I'm just doing a briefing. Then Fibonacci retracement. Okay, let me show you how to use the Fibonacci retracement to find out your support and resistance levels as well. Okay, now this is our Fibonacci retracement. You can see when I move towards that icon, it shows Fib retracement. So if you want to use your Fib retracement, you drive all the way up like this. You can also start from the down. You can drive all the way from that side down here, so you can find out your support and resistance levels. Now if you look well on this Fib, you notice that, let me use the path tool here, price created this high, and then for a very long time it dropped back, and then it came back again. Now the moment it came back, it started bouncing up and down in this level. Now if you look where, you see that that level is around the 50% area. Let me show you, let me zoom in well so you can all see. So you see this is 50%, this is 62%, we have this 70% as well. So these percentage levels are the psychological levels that price, the Fibonacci retracement levels that price keeps reacting to as time goes on. That is why we can also use our Fib to find out our support and resistance as well. Alright, I guess we're good to go with that. Then, now how to trade using support and resistance. How do you trade using support and resistance alone? Okay, now first, you can do bounce trading, which in that bounce trading, price reacts at support and resistance, and then we have a reversal. Okay, let's do an example of that so you can get to see how it is. Now price reacts at support and resistance, and then we have a reverse. So first we have to mark out our support and resistance levels. Let me use the box tool. Okay, so we have our resistance here, we have a support level here, then we have another support level here, we have another support level here which price reacted to in the past. Okay, now we want to take a trade with our support and resistance. Okay, so what we basically do is, now we have known the highs and lows, which is our support and resistance on the chart. Now we have to wait for price to come back. If you remember well, it says price comes back to past highs and lows. So we got to do what? We got to wait. So we wait for price to come back to a previous high or a previous low. Now if I was to take this trade, which is playing out already here, I analyzed that trade and I caught the trade as well. But if I was to take this trade, all I will have done is, now I know that this is a past support level, right? So now I'll be waiting for price to come back to react to this level. Now, even if price didn't come deep enough to this level, I will have used this order block here. That's another class, order blocks. I'll have used this order block to find out if price was to move from that level or not, which was how I caught the last trade. So let me move to a lower time frame so you can understand better, because this is a higher time frame. It takes long for price to react and show us what we want. Now let's use the 5-minute chart. Okay, now we'll mark out our highs and lows. This is now a past low. This is the recent high that price just took out. Then this is also a past low as well. And then we have this previous high here, which price reacted to move to the upside. Okay, we also have this past high here. Now, if we were to take this trade that just moved up to this level now we know that price is coming and price has been breaking highs. Let's use our path 2. All the way from here, price broke this high, came down here, broke it again, came, reacted to this past high, reacted to this low, which is our support, broke very much higher, then came back to this resistance here again, tested the resistance and then went higher. Now, we knowing that price keeps coming back to past highs and lows, all we will have needed to do was wait for price to return to a previous resistance or support. So if I was to take this trade, I will have only waited for price to react to this resistance high here, this high here, and then we'll have taken that trade at least with a risk reward of 1 to 3. So I guess that's pretty much it for now. We don't want to dwell too much on that. We'll still do more classes for you to understand better. Okay, then we go to breakout trading. Now this is pretty much useful when price is in a range. Price breaks through support and resistance and continues in the same direction. Okay, let's look for a scenario whereby price did that. Okay, now if you look well in this range here, you see that price kept dancing up and down inside this box, and then we had a forceful break to the downside. What did price do? Price came back, but it also went in the same direction like we just read. So that is our breakout trading style. Then we have the retest strategy. Now the retest strategy is pretty much what also happened here. Okay, our short position. The retest is when price came back to this. Now this will be resistance for us. So now when price came back to this resistance, price then headed continuously to the downside. This is our retest strategy. Let me mark that out for you so you can get to know the differences. This is the retest kind of entry on the trade. Okay, then in here where we took the trade, this will have been our breakout strategy. Alright, cool. Now we have seen both strategies marked out. So I've shown you the bounce trading, I've shown you the breakouts, and I've shown you the retest. Now this is a tip for you guys. Always confirm breakouts with volume or candlestick patterns. Make sure to always confirm your breakouts with volume candles or candlestick patterns. Now, if you notice well here, before price broke out of this consolidation here, you see this candle that went to the downside was a forceful one. This candle that went down and gave us the break out of this range was a forceful candle, letting us know that price has now broken out. If you don't see a forceful candle, you can't take that as a breakout yet. Understand? That's a tip for you guys. Now, a practical application on live chart example. See, I've done pretty much a lot of examples already, but I would love to do more. Let me do one more so you can get a grasp of it. Okay, now if you look down here, you see this is a consolidation area. Price keeps dancing up and down inside this box. Now, before price broke out of that level, you see price went up, down, gave us a break of structure, came back down, retested, and then gave us a final break before we had a continuation to the upside. Now that is our breakout strategy. If we were to take this trade, all we'll have done was mark out our support and resistance. Okay, then we'll have waited for price to break our resistance and come back to our support before we take our entries. Now price has come back to this support level, so what we're supposed to do was take the trade from here, which we'll have done. So we'll have taken a buy from down here with our stop loss 17 pips, then all the way here we target 1 to 3. You can see pretty much fast price gave us our take profits. So that's how it works, guys. Then for our retest strategy, you notice now price came back to this resistance that was broken again, just with a single tap, and then continued. So this will have been our retest entry here. Yes, so that had a little more stop loss, which is 24 pips. Then we'll have targeted 1 to 3 again. So that's another example for you guys. All right, cool. Then now, okay, let me explain to you how we put our stop losses on the trades. Like I said earlier, once we take the trade, we are only targeting 1 to 3, a ratio of 1 to 3. So once you put your entry in here, our stop loss will be below the low, below the support level here, which is this level. This was the lowest support level. Then we target 1 to 3. Okay, this is a little higher. I put the stop loss very close before. But if we were to use the right stop loss, which is around here, then our take profit will have been this level. Okay. Now you put your stop loss below the lowest support level, and then your take profit at the next resistance, which was this high. This was also another resistance here, but we'll have pretty much used this high, and that will have given us 1:2.6. Okay, then I guess we're good to go. We're good to go for the class. All right, now that you understand support and resistance, we'll take it a step further in the next lesson by combining it with candlestick patterns for a powerful trade setup. All right, make sure to like and subscribe to my channel. Like the video and subscribe, and make sure to turn on your notifications. All right, do also drop mastered in the group in the comment section, so we can see that you all understand how we've done so far. All right, bye for now. Peace out.